Welcome to the upstreamlife.com, and I'm your host, Vishal Krishna. We at the Upstream Life believe that there is no stopping India when it comes to startup innovation to enable consumption and many more things. Fintech ecosystems from India are going global. Think about it. UPI is already going to the UK. Can you believe that? And then we have the Indian SaaS story, which has really done well. It's a cross-border global success, especially in the US. Indian companies are ruling the roost there. Then we have e-commerce and D2C businesses, which are here to stay permanently, ladies and gentlemen. We have sectors like agri-tech, robo-tech, and content making the rounds also. So what does the India story look like as we come towards the end of 2022? We are in the last quarter. Let's see how we're going to run. Answering all those questions and much more is Rohit Krishna, the partner at WEH Ventures. Of course, we're going to tell you about WEH Ventures as well. Rohit has been at WEH for 7 years now, and he has an excellent portfolio of startups that have raised up rounds. 12 of them, in fact, have raised up rounds, large ones, in fact. The fund has invested in companies that you know. Some of them are small case. I like Pratilipy myself, Zunbox Robotics, and Animal. Right? It's Animal, is it, Rohit? So their first round, okay, Animal, great. Animal is the company that I like. We'll talk about it. It's an agri company. Then, by the way, WH Ventures was a 20 crore fund once, 5-6 years ago. Now they are very successful. They have a large fund. Rohit's going to tell us about it. Rohit, how are you?
I'm doing very well, Vishal. Thanks a lot for having me.
You have to tell me about yourself. What's been up with you over the last 3-4 years? I've seen the success of WEH and all its startups. Can you tell us quickly about your role there for the last 7 years and how you've grown? And then let's set the fund stages in context and what you've done.
Got it. So see, I come from a public markets background, right? So I was at this firm called Spark Capital. And I've always fancied private markets much more because it's just more exciting, a lot of new things happening. So I connected with Deepak in 2016, and we were both figuring out the early stage venture sort of space. And we launched an investment bank in 2016. So that was the sort of beginning. We ran that for 1 year and we got very comfortable with the ecosystem. So 2017, we launched the first fund. And as you said, that is a 20 crore fund. And we invested that from 17 to 19, and 2020 we launched our second fund. Now this is a 115 sort of crore fund, so significant sort of jump. But the strategy for us is broadly remain the same. We are a seed stage fund. We come in any round prior to the Series A, and we are sector agnostic. But what we do is we take very concentrated positions in companies. So from the first fund, we invested only in 9 companies. And the second one, we'll probably invest in about 15 to 18 companies, right? So it gives us enough sort of dry powder to invest again in the successes. And also, this is like a better capital allocation model in our view to generate sort of higher superior returns for our LPs. So this is how and what we've been doing, and we just continue to do the same thing. And we are now deploying the second fund actively.
What interests me is the way you grew, right? Literally now, almost at the co-founding position and being a partner. How did that journey? I'm just fascinated that how did you transform yourself?
No, it is very natural, right? Because in venture, at least, larger team doesn't equate to sort of better success at finding these deals, right? You could be a solo GP, which is again very, very common in the US. So for me, I've always tried to be, I knew that my success, whether as a career or in terms of performance of the fund, are very closely tied. So the fact that I'm a GP now, I think that's just a position change. But in terms of what we've been doing, nothing has sort of overall changed within the team. And even now we're a very small team, we're just 4 of us, 2 partners and 2 on the investment team. And we've been able to do fairly well, right? So
let me know the things that made WEH what it is today, pretty successful. Everybody talks about small case, Pratilipy today, and you have a couple of other large companies like JAR. 5 years ago, 6 years ago, 7 years ago, even in your case, how this transformation was it expected in your case personally, and also in terms of the company picking these startups? How do you know that some of these categories will play out, no, Rohit? I mean, I want to set that context to everything that's going to happen in the next couple of years, right? I'm sure 7 years ago, we wouldn't have seen how the UPI would have played out and how things have played out now with D2C, right? What were the early challenges? I mean, for you yourself, you'd have found it difficult to convince funds, convince the LPs to come on board. One, second, also convincing startups that, look, we are a fund that you need. And how did that happen?
No, see, it's an interesting question, and Deepak comes from the Intel sort of capital, right? And he has a very, very strong culture that is imparted thanks to Intel. And I honestly think that's been probably the primary driver for the success because, as you said, we are a small fund. So, one, we'll have to sell ourselves to the companies as well. Like we are a startup, we were a startup in 2017. So, on one side, that was happening. And on the other side, because we are new to the market, we'll end up making a lot more mistakes, right? Like we'll choose wrong companies, we'll take wrong companies to the ICs, and then get sort of rejected. But I think that was the process which we were embracing, like in a very, very beautiful way. We didn't even feel bad once about missing deals that we couldn't get in just because we were small, or we ended up investing in wrong companies, but that sort of gave us so much learning and just broadened the sort of our horizon, right? So we embraced it and we continue to do that, and that's probably why we've ended up investing in very, very unique companies like Smallcase, because back in 2018, people questioned the market size of Smallcase like in a very, very big way, right? Like a lot of tier one VCs had declined the company. Same for Animal, which sort of we invested in end of 2019. It was an insanely new concept, and no one has heard of sort of cattle trading marketplace anywhere in the world. Uh, but then again, because we were just happy taking these binary bets and also just happy backing a founder if he is very, very passionate, and that's sort of the same case with Smallcase or Animal, right? Like I think that's the common thread that we saw. And of course, we've understood the fintech and commerce space quite well. Our D2C is what you mentioned, and our first D2C brand investment was in 2018. Now that company did not survive, but because we've been sort of invested in this space since 2018, we had a very, very close sort of call on what's sort of happening in the ecosystem. So we've seen it evolve over the last 4 5 years, and therefore that's shaping up our investments right now, right? So even though that was sort of not a success, but it's leading to more interesting investments in now in 2022.
Yeah, now that follows up on the next question, right? It's been a funny 3 years. Started off with the COVID, of course, and then suddenly, the war in Europe happened, and then you see inflation really killing things in America, and then markets going haywire. And then everybody said that you have to start, downsizing, and you got to start saving money. But because you're an early stage fund, I'd want you to tell us, is there money that's going to come into the ecosystem anyway? Because India's story is not going to stop. Although the number of deals that dropped in the last quarter or so, you definitely see that this is just a short-term blip for the India story.
So, no, see, it is right. I think the number of deals is always a lagging indicator of what's sort of happening. One, because for deals to happen, one, you need interesting entrepreneurs coming up and starting companies. Without them, it doesn't matter how much money you have, we still can't fund anything, right? And the second is VCs should have enough dry powder. So 2021 and 2020, what happened was I think a lot of VCs were gearing up for launching the new fund, whichever cycle that they were in. And by end of 21, almost all the funds had sort of been closed, from large funds to small funds like us. It's all sort of done raising. So now what you have is a very, very interesting phenomena wherein we have a lot of capital to deploy, and we're just not deploying because of two reasons. One, you need more founders to start up something that they're passionate about. This happened a lot in 2021, but that was also because people thought you could make very quick money because the follow-on rounds were so fast, right? So there were a lot of founders who were not necessarily designed to work for the next 5 to 10 years, but they still sort of jumped on the entrepreneurship journey. But now what you have is founders who are really, really passionate about what they're building, and they don't care about the market ups and downs. They'll continue to do what they've started to do for the next 10 years, 20 years, right? So these are the kind of founders, but unfortunately, there are not too many of them that sort of start up, right? Like, and it is rare. But whenever, us or any of the other VCs that I'm in touch with, when you see a founding team like this, they end up getting capital, no matter what stage, whether Series A, B, seed, whatever it is, they end up getting capital. So one is that. The second, I think there is an important shift towards monetization across sectors, right? Like I think that has been a very, very important shift, and also in terms of how much money do you need to reach a certain scale, the capital efficiency of different companies. So that has come to the forefront, and because of which Companies which have, let's say, raised a Series A or B before, just based on sort of momentum, would now have to just rethink and recalibrate some of their unit economics to make sense for the current market. But I think founders who are starting afresh, they are in for a great journey, right? Because I think all you have to do is just build the right sort of culture to have the right unit economics from day one, right? And if you're doing that, you have more than enough capital available to sort of build your company.
You're basically saying that founders who have their product story right and their market segmentation right will continue to raise money no matter what, right?
Yeah.
That's what you're saying.
Yes.
And there's enough money out there, actually. You're
Yeah.
saying a lot of people keep worrying about the valuation, but you would say that don't worry about it, build the product.
Yeah, don't worry about it, right? And I think the valuation will always, sometimes you might be short sold and sometimes you might be raising based on momentum, but it'll all sort of balance out in the end.
No, fantastic answer. What are your opinions on these kind of things, right? I mean, UPI was major success for the Bharat story. And now I see, because I mean, people are using the UPI and consumption patterns now. Fintech companies are coming through the UPI because I understand how consumers are spending money. What's happening to the Bharat story in terms of B2B, B2C? You could bring in animal there also. You could bring in small case. It's so many different aspects of the Bharat story are playing out today. I wanted your thoughts on how this is going to play out for the next couple of years.
Yeah. No, see, I think UPI is so fundamental that, like, how much ever we talk about it, I think it still won't do it justice. Just because without UPI, without the financial infrastructure, none of this can happen. Like, none of the stories that we talk about can sort of happen because it would have all been in cash. And as we know, that's sort of not a sustainable model for any company, right? And so, interestingly, JAR, for example, right? We are an investor, and they are completely going after the Bharat sort of story, and their UPI autopay in particular is working so beautifully that people are just saving 50 rupees, 100 rupees every day. And these autopay customers are, and you don't even have to open the app. So forget about time spent, forget DAO and MAO and all that. You have a very, very active engagement where people are investing without having to look at a product. That's amazing, right? And that could happen only because of UPI. And similarly for Animal, so there are dairy farmers in the remotest part of the country, and let's say they have a listing on the platform and they want to make the listing a premium listing. They super easily pay through UPI and just like create, like, buy credits and use those credits to make that a premium listing. Now, this we would have never thought would happen, but it's happening at scale now, right? So
It's interesting. That is the most interesting use case.
yeah, it is very interesting. And just money transfer across, like, even if animal wants to buy cattle from one of the farmers, it's just so easy. Everyone is open with UPI. There is no question of, oh, give it to me in cash and all of that, right? Like, it's synonymous with money getting directly deposited in your bank. And in fact, for them, it saves the journey to the branch, which is usually 20-30 kilometers away. So it is just win-win for all.
It is, and is the Bharat story about inclusivity and sustainability and for profit? I sometimes see the Bharat story being a charitable story. I really don't like it. I wanted your thoughts on this. What are we doing here in terms of Bharat? Is it inclusivity, sustainability, or both? And obviously, I had profit on top of that, like the animal story. Who are we replacing? Who are we making sure are not left out and are inclusive? What is the sum game for the Bharat story? What so many opportunities? I mean, India itself is so complex sometimes, right? So, what is the Bharat story in terms of inclusivity and sustainability for you?
You see, I think because, like you said, the Bharat is so unique in itself that you can't take an existing model from outside and sort of try and apply it here. So I think all the products that has worked, whether it is for profit or not, has been products that has been created from scratch for Bharat. Like Animal is a great example, and Jar, it works only because it's only gold, right? Like, and that's the starting point, which is a very, very small nuance, but it takes like first principle thinkings to sort of get that. And although these companies have become successful and they've raised a lot of money and it's for profit for sure, but they're creating so much impact because they're reaching so many millions of people who probably could not have got access if not through sort of digital mediums. So that is for sure. Otherwise, like the cattle sort of fair which used to happen at every rule thing, that can only happen at regular intervals, right? Like it can only happen, let's say, a fortnight or a month, depending on which region you are. Whereas now on the app, you get regular access to selling it and regular access to prices, which can sort of change every day. Now, all of these benefits are being passed on. So I think it's more important to look at it from a for profit mentality. Only then you will have enough resources to even build something like this, right? Like both, like for example, animal, if not for scale, it will become irrelevant because it's a marketplace, right? You need buyers and sellers. So, like you said, if it's a not for profit inclusive sort of product, you might not be in ability to raise a lot of capital within the first 2 3 years of building the product to scale it to an extent where it works. And if it doesn't work, like the product can never sort of take off, right? Like I think that's why it's important to look at it from just a financial investor point of view, and then the rest automatically happens.
No, well said. I'm really curious to also know the Pratilipi story. Such investments, very Bharat-oriented story. In terms of the languages as a technology, where is that ending? I want your thoughts around agri-tech. Where are we going there? Do you see these as sunrise industries or sunrise sectors to go after for? Because I'm thinking, unlike the old days in e-commerce, there were 100 companies that came about, and they consolidated to two or three now,
Yeah.
right? But the D2C story is so wonderful that you can have as many brands. You don't need the e-commerce players because the D2C companies themselves have e-commerce. How do you see the agri-tech thing play out and the language as a tech play out for you in terms of opportunity?
Sure. See, I think Pratilipi we invested, we know the company since 2017, right? And I think he was one of the pioneers in sort of creating this whole language as an ecosystem for India. And he chose long form content and stories, literary form of content, and he sort of stuck to that. And he is the largest player in sort of the country as of now, right? And sort of monetizing really well. But since then, what's happened is interestingly, different formats have taken, like, from GIFs to short form video to long form video. All of them have sort of become more and more in Indian language first. Like even YouTube, for example, right? Any search you currently do, the first results are Hindi, right? Or based on wherever you are. So that has happened. I think from a dearth of vernacular content back in 2016 and 17, now you have Indian language content in almost all forms of media. I think what's missing is the monetization ability for each of these platforms, because it's unique to the platform and it's unique to the form of content, right? Like podcast could have a different form of monetization. And who thought virtual tipping would become so big, but it's insanely big currently in the Indian market. And I think that's sort of what is happening. A lot of experiments on monetization is happening right now. And also vertical sort of content platforms like Apps for Bharat is coming up, right? Like it's a Sri Mandir, it's a spiritual platform. And it sort of gains traction with a specific user whose interest is very, very specific. And they open the app for a specific reason. And they monetize also very, very specifically, very differently as compared to any other horizontal platforms. So I think that's what we've seen happening a lot on the content side, and even gaming. Like for example, all the streaming platforms that are coming up, right? They're monetizing very differently, but then again, it's a vertical sort of platform in Indian languages. So I think that's sort of what is happening right now, and we are investing on this sort of trend right now on the content side.
Brilliant.
Agree? Yeah. If you have any questions.
No, it's brilliant. I'll keep the agri in mind because you were going to agri. I'll remember that. The question that I had now for you is content-led e-commerce is also very popular. You are right. Whoever knew that there's podcasts and there's a different method of monetizing podcasts, you're absolutely right. Content-led e-commerce is something that you've invested in as well. How is that panning out for you?
See, I think it's two difficult problems, right? One, you have to get a lot of people to watch your content, and that content has to smoothly lead to a commerce decision. But even after it leads to a commerce decision, you have to get multiple things right on commerce in terms of the right brand being there at the right price and the right sort of speed of delivery. And the last bit, especially the speed of delivery, has gone through so much change in the last 18 months that it's not just about getting the top of the funnel through content, but the pure sort of core e-commerce logistics has taken, changed so much with Zepto and all the quick commerce plays coming up, that the goalpost is being changed constantly. So it's Prime one day delivery is no longer good enough. Like while D2C brands are trying to match up to Prime, Zepto just amped the thing to 20 minutes right now. So it's just the goalpost keeps changing. So it's very hard to build a full scale sort of marketplace. But if you play only in one side, let's say you end up acquiring users brilliantly and you do just that without taking care of the logistics bit angle, then you might still make a valuable business. So I think that's sort of what we are trying to explore. If you can take parts of the whole e-commerce journey and then do that really well. So we invested in this search tech company, for example, called Zevi, which is doing only search but in vernacular languages for D2C brands, right?
And
Yeah,
that too niche for D2C brands. Fantastic.
yeah, right.
That's like a SaaS business for D2C?
Yes,
Yeah.
pure
Okay.
SaaS. Yeah,
And that's phenomenal. So that's a global business too, if you can do global languages.
yeah,
Let's go back to the agri. I saw one of your investments that can do warehouse space, which is unbox robotics. Right? They could
yeah,
help. I think they could help shelves move. It was sort of a robot that could move around and
correct.
place things, and that was a fantastic company. So when you combine agri tech, which has allied services like warehousing and also food processing, branding,
Yeah.
that can also be the extension. Where do you see that industry heading?
You see, I think agree the like it's a hard industry, right? It's one of the hardest industries to crack purely because there's so many players in the ecosystem, and it's a very evolved ecosystem. And it's not like they're doing honestly very badly, right? We're a food surplus country. We export 50 billion worth of products, food products every year. So it's not that we're doing badly. It's just that still there's so much inefficiencies in the ecosystem which has been built over a period of 50, 60 years, right? And it doesn't sort of change overnight. Uh, Animal, for example, has taken a digital product first approach. But a product first approach might not work in a lot of categories within agri, right? And that's what we've realized. Sometimes all you need is a trade first approach, like give them demand and then figure out what to do next as to how to improve the inefficiencies within the ecosystem. Without money being on the table, sometimes the other players in the ecosystem don't really stand up and listen to you, right? You can't say do ABC without giving them what is the result of doing ABC. So that is a problem. Sometimes it works, sometimes it doesn't work. uh, so I think we are looking for interesting trade first products within agri where you can sort of enable sale, and then to do that you have a lot of efficiency driven products in the back end. Some could be tech driven and some could be manpower driven, whatever it might be. I think that could sort of accelerate adoption, even for technology, for example. Instead of saying, here is an IoT device, go put it,
Yeah,
and then it gives you sort of all sorts of details, which farmers don't know what to do with all of that, right? And then you have to educate the farmers. So it's just very complicated. Rather, you say, I'll buy your product at 20% premium, they'll happily sell to you. And then
abs-
you tell them, this is what you have to do if you want to sell it to me, right? So I think that's sort of an easier journey. And there are a lot of companies which are now taking this approach. That in the last 12 months, we're seeing more and more companies doing this. So, but it's the opportunity is just so huge because the inefficiencies are, we've not even cracked like the big.
Absolutely. I have this theory, right? And Rohit, you tell me if you disagree with it or not. I mean, or can disagree, of course. I want to know. I think there will be a lot of startups solving a lot of problems, and they may not be consolidation at all. I don't see the power of one or two in this case, in Bharat's case, right? You see several large companies being built with technology. So we've solved the payment system in
Yeah,
a way, and I'm sure lending will come in, and it'll aid consumption, it'll also aid business expansion.
good.
But do you see several companies solving several problems? Several companies that are of particular scale and size, but not definitely a unicorn, but will be large cash generating businesses from the startup ecosystem. Do you see that happening?
See, firstly, yeah, I agree that several companies will solve several large problems, and I don't see consolidation really taking place because if you speak to anyone within the ecosystem who are actually using the products, it's not like they are, want this super app which has everything. No one has literally asked for that ever, right? It's just that because we're trying to emulate China, that's sort of normal for us to think that this will also become like that, especially the Bharat ecosystem. But they're more than happy to have 20 apps on their phone and open all the 20 apps for different reasons, right? And that's sort of what we believe in, at least. And that's why we've invested in vertical networks like Apps for Bharat. But on whether it can be large enough or do you think it will sort of be cash generating sort of businesses, I think there'll be a mix of both because you have podcast companies like Coco FM and all, right, who already cash gen positive, right?
Absolutely. And they've done very well. I'm mighty proud of them for vernacular languages and what they've done.
Yeah, and who would have thought that you can have this subscription form of payment for Bharat, let alone tier one cities, right? And they've beautifully done it, and that sort of shows that people are ready to pay, irrespective of where they are in India, right? They're ready to pay if you can provide some value. Uh, so they could be a cash generating large sort of business. Whether they'll become a unicorn or $5 billion company, we don't know. But they'll still end up making a lot of money for their investors and for themselves in the process.
I completely agree with you in second on that. And now I want to get into this aspect, right? What are some of the sectors that, you and I would have seen? I mean, I want to start with you asking you that some of the sectors that showed a lot of promise, but went by the wayside and didn't come back on top. Do you have any such stories to share with us? You don't have to name the companies or anything. Certain things. For me, I think the IoT story in India was dead. From my personal view is that. But what are some of the sectors that you want to think that didn't make it, but can make a comeback, maybe or will never make a comeback? And you can also tell us some of the favorite technologies or businesses that can go up there and do very well.
Sure. So I think back in 2018 beginning, we held a pitch event just for VR startups in Hyderabad. Right, at that point we thought, it's sort of an emerging technology and a lot of great things could sort of happen. There were about 100 odd applicants, and then 15-20 ended up pitching, which was amazing because I didn't know the sector was so deep at that point in time. But probably out of the 100 companies, 5 would be surviving today, right? And that's sort of the state of the market.
Yes.
And unfortunately, that never saw the light of day. Like the whole ecosystem, we thought, with Facebook launching Oculus, that was a big event, but then nothing happened even post that, right? I still don't know if this will be a big sector or not, or this is just a passing sort of technology phase where the basics of this technology will lead to something else in the future. Probably that's sort of what might end up happening. That is one for sure. The second is drones, for example, right? Like again, people thought you'll get deliveries in drones and all of that. Nothing close to that has sort of happened. I think it's been primarily a defense-driven market for drones. Like most of the money is made there. There again, we spent a lot of time 2-3 years back, but then sort of decided to pass on it because we thought it was too early. So these were two sectors where it showed a lot of promise and sort of didn't see the light of the day. And sectors we are currently excited about, content for sure, because again we are big in content. And we still, like I said, that there's just so many new forms of monetizations coming up that I think now companies don't have to wait 5 years to monetize. You can start monetizing within first year itself, right, of launch, if you get those active users. So that is one for sure. We'll continue to invest in that. And second, over a broader theme is commerce. Now we saw the D2C wave, and now we're investing everything around commerce, like Unbox Robotics, which is doing warehouse optimization, or like the search engine that we are doing, right? Like which just improves the conversion rate. Zevi. So that is the commerce story on the B2C side. But I think what's interestingly happened is B2B, where it's actually not a winner take all story at all, right? Like you could have 10 different large companies making tons and tons of cash and still not be, still be 5% of the overall market.
I completely second that. And the Bharat story, yes.
And what I'm really happy about is in the last 2 years, VCs have taken notice of this B2B companies, and just so much investment has sort of gone in. Otherwise, this was not there's nothing unique about most of the B2B companies out there, right? And it's not like I said, it's trade first. But I think VCs have now embraced that, and they're really, really happy investing in this. So I think you get a lot of money for fueling the first few years of working capital, which is what you predominantly need money for, right, in the B2B business. So we're very bullish on this. We'll continue to invest in companies, and I think after a few years, you have all sorts of bank financing you could sort of use.
Absolutely. I think so too. I'm predicting a whole bunch of changes to happen in India. I mean, look at the number of banks out there that need to be digitized, right? I'm sure, and with the way consumption is growing, either on the B2B, B2C side, you're right, Rohit. I think 5 years, you'll see a lot of new things coming about.
Yeah, I think it will probably become more efficient in a lot more channels, apart from saying, here is an app, use this product or use this service, right? That's what used to be 5 years back, I think. But now we're talking supply chain innovations across both the consumer as well as the business angle.
That's very powerful. I'm glad you said that. I want to come back to WH a little bit and talk about the investment thesis. You're agnostic. You clearly say it on your website. I want you to talk about companies that didn't do well for you, why they didn't, but also the IRR that you've done. You can give me, you don't have to tell me the exact numbers. You can tell me what is the IRR. The first fund is so successful. It's allowed you to do the second one. I hope the third one's going to be larger. You're obviously deploying the current fund. That journey from being a small fund, how tough was that? You give us a small tidbit on the fact that you had to convince startups that look, we are a good fund.
Yeah.
Right? And then obviously everything else that happened. What is the IRR like for you in the first one that led you to the second one that's actually picking up some wonderful companies?
So yeah, I think see the first one again, because we invested only in 9 companies, we just had to get 2, 3 winners, right? And we did get more than that. So I think luckily for us, it's done quite well. We now stand at a 40% plus IRR for the first fund on
Fantastic.
investor basis, not from our investment basis, purely from an investor's cash flow basis. And we've also started giving some exits for the first fund, and now we are in that mode. Wherever a company we feel is large enough, then we'll take some chips off the table and sort of give it back to the investor. And I think that's what enabled us to launch the second fund amidst the pandemic, which is where we raised most of our capital. And I think about 60% of the fund or so was completely raised from the fund one investors. Almost 80% of them doubled down and invested again.
Are they all local investors or global?
They are 98% local. Like most of our capital is through local.
So that means people believe the India story. They like it. They like how India is performing.
Yeah, of course. And I think what they've also realized after making few angel investments is that a more structured approach is better. Because, like for example, even small case, right? Like even though people think it's unique and we got in the deal, but before we invested in small case, we probably rejected 30 companies which were similar, doing similar stuff on the investment side for India. So as an angel investor, you might have found any of those 30 companies unique and doing something very interesting and put your money down there, right? But because we are doing this as a profession, we just wait for those right companies and then act really fast. So they like that, and that's why.
Okay. Okay. I want to talk to you about the roadmap to 2020, 2024 for you. What are some of the pitches that are coming to you that excite you? The reason I ask you this is not in terms of how to pitch to you or anything. What's some of the exciting pitches that you had in what sectors, and why will that set a roadmap for you in 2024 to look at some big exits, maybe allow some of these startups to raise big rounds from large companies?
Sure. So one, definitely we're just seeing so much focus on exports. Again, this is overall to the theme of B2B. While there are inefficiencies within the domestic market, I think export is just, we are so small in the overall global scheme of things that there's just so much potential in every industry, right? And all the manufacturers or even in the agri supply chain, if you can give them export demand, they'll do anything, right? They'll set up new plants, there's no problem whatsoever. So I think we are seeing a lot of interesting companies here, a lot of experienced founders trying to tackle this and trying to sort of grow the export base for India. And I think this will also improve, for example, the INR USD conversion and where our rupee stands in the overall scheme of things. I think this is very important for the country. And I think if we take bets now in current year and the next year, this will play out over the next 5-10 years. And I think large companies can sort of be formed in this space.
Okay. I want to know your personal learnings from startups that you put a bet on but failed. Don't name them. I don't want you to name them because every founder there fails and has to come back on top.
Yeah.
Was it the investment thesis for you that failed on that startup, believing in the opportunity? What went wrong? Sometimes founders have the biggest of good ideas. Right? I mean, they have great ideas. It often fails in execution or team. But what are some of the things that happened in your learnings that you saw that, okay, some things you can't predict, maybe, but you thought they'd work? Give us a couple of examples if you have any.
Sure. See, obviously, like I said, we've embraced our failures and, we continue to make mistakes again and again. But one thing we continue to, find the right balance is, like you said, between the founder and the product at the very early stage, because both are important. But which is more important, right? Like, is it the product or is it the founding team?
Absolutely.
Do you give
that's a very difficult question because other founders can talk really well.
Yeah. Exactly, right. And so, do you give a blank check to a great founding team saying, "Figure out the problem and solution. I don't care what you'll build," or do you already, give money behind a team which has built a great product, a very very unique product and a great product? So I think we've taken couple of bets where we've been product first, and we knew we were ahead of the market, we were ahead of the space, we were probably one of the first investors in sort of the overall space. So we got the theme right, but we got the team wrong. Right, team wrong in the sense is just that they were not perfect for
I get it. I
this
get it.
problem, right? Like they could continue to build other greater things. It's just that the founder market fit was not there. And sometimes we did those investments knowing fully well the founder market fit is not there.
And can you define what the founder market fit is, just for the knowledge of people listening here?
So, right, like when you're very building something very early, right, you'll always go ups and downs in the industry. And if the founder is not passionate about the industry or the product, it's very easy to give up at any stage when the market is going down. And if the founder market fit is not there, you'll give up. Whether it is in the second year or fifth year or seventh year, you will give up, right? I think unless you're very very passionate that this is what you want to do for majority portion of your adult life, like they need to be convinced about that. So I think that is what we think the founder market fit is, because the
No,
product.
really well said. Really well said. That's a good example. Any other examples like that?
So this is one, and then second, I think in the fintech space especially, we've underestimated the regulatory sort of challenges a lot, right? Like we thought, okay, this is a very interesting product, a very cool consumer product. They'll figure out a way to launch it, but it's not easy, right? And there are so many regulators out there, and I think they're doing the right thing because you cannot be so easy with money, and I think that's very very right thing. And we are now very careful about the regulations. If a startup is not very clear as to how they'll sort of navigate the regulatory sort of hurdles, we will not invest at the early stage. So they need to
Fantastically said. Fantastically said. So you need founders who understand regulations. I think those watching in should listen to this because most of the founders sometimes are ahead of regulations, but they do know why they're making that change. You are saying that they should know that.
Yes.
Otherwise, there's no point in building things.
Yeah, you can't say we'll figure it out later. That's
well said. Okay. Quick thoughts on the last 7 years because we saw the industry rise together.
Yeah.
I wanted your thoughts on, this whole thing of, this whole 7 years, I was fed up with things like, you have to do it. Starting up is great. It's a struggle. We built this narrative. Then we made it sound larger than life. Yeah. Then it became an albatross around many people's necks saying, oh, God, to have to perform. Right. And then there's this whole tussle of, whether the existential crisis I'm talking about, whether, should I be a unicorn? Should I make it to 100 million? Should I start generating cash? Hey, cross-border karna padega. All those things that started cropping up. In the 7 years, I've seen a lot of these shenanigans.
Yeah.
Have we moved on from all that, or will it continue for some more time?
No, I think it'll always continue, right? Like the ups and downs. There's never be an equilibrium because you're talking about money at the end of the day. So there'll be at some point you'll give too much money to one company, and then at some point you just will stop giving it, right? And it'll continue to happen. It'll never be in equilibrium, and that's probably the exciting thing about the journey as well, right? Like
absolutely. You're basically saying that'll keep the PR rolling for more people to start up, good people to come on board.
Exactly, right? Because if you don't have those incredible highs, people will not leave extremely well-paying, cushy jobs and start something because it's irrational to do it otherwise.
Yeah, Rohit, your thoughts on hiring? A lot of the startup founders complain to me saying that this is a continuous problem, that unicorns or whatever, we have 100 plus now, and maybe some of them will go down also. But in terms of hiring, how does somebody look at hiring great engineers? Are you a fan of saying that pick from smaller colleges, logically very good kids, train them in terms of presentation, getting to investors, pitching to them, knowing that building the technology? Is that a better way, or just say that, look, raise money, hire the best? What are your thoughts, or is there a balance of the two?
No, I think it depends on what are you building, right? Like if you're in a very, very competitive space, you have to raise money and, hire the best. Like Cred does, for example, there's no doubt. And that's why they're on the top, like they're one of the largest platforms out there. But then there are other spaces which is not necessarily attracting a lot of competition for whatever reason it might be, right? And there you have the benefit of time. So why not just, like you said, just go to a smaller city? And we have two companies, for example, from Ahmedabad. In the last sort of 6 months, we made these investments. and they've hired great talent at a fraction of the cost of what you can get in HSR. And they're building products, right? They're shipping products very fast as well. So it's just about taking the extra effort of, let's say, having a satellite office or moving probably even your entire team to a tier 2, tier 3
Yeah.
city and just nurture the talent. It might take a little longer, like you can't sort of like hit the ball running, but you can still sort of build a great product. So I think where you have the luxury of time, like for the medium term, that's a much better strategy. Where you're in a very hyper competitive space, then you will have to raise a lot of cash and continue to attract talent at a rapid pace.
But would you say there's enough talent in India? We've done a good job there. Do you think there's enough out there for startups to absorb and train?
In tier one cities like Bangalore or outside, you say?
Outside, yes.
No, outside, yes, for sure, for sure. And I come from Chennai, right? And I still
Yeah.
know so many of my friends who still continue to be in Chennai. It's just not because of they're not ambitious enough or they're not good enough at whatever skill they are at, but it's just that you're so comfortable within a city that you don't want to leave the city for whatever reason it might be. So, like that, I think whether it's Coimbatore, Ahmedabad, or there's so many tier two cities which have great colleges, and
I like what you just said, Rohit. I mean, a lot of the Chennai people will be happy you said that because it doesn't mean because they're sitting in Chennai and haven't moved to Bangalore or Hyderabad doesn't mean they're not ambitious. They are extremely ambitious. It's just that Chennaites have their own culture. They probably stay there,
and they're
right,
very good.
Rohit?
Yeah, and
Yeah,
you need
yeah.
the balance. So I think you have insane amount of talent in. I think outside of Bangalore and Bombay, I'm not even going to say tier two because I think startups are just in these three cities, right? So they need to go out more. And luckily, we have 3, 4 companies which have headquartered in other cities. So that's why we get the
Okay.
insight.
Okay. So we come to the end of the show. I can't let you go without asking you what's the outlook for 2024 is very good, right? For you, it's a positive, or it's a save your cash, build your product, go through slowly. Your advice to B2B, B2C companies, please.
No, I think you should be very aggressive 2024. Like be very positive and optimistic because there's so many good things happening. So you should just go all out, right? Like in terms of just don't hold back at all.
Good answer. Now, next question is about your personal life. What makes Rohit happy? Are you happy being a VC and your guide to happiness generally in life? And the books that you are reading at the moment that you could recommend, it need not be any of these startup books. It can be anything. It can also be books, books of art, maybe pieces of art, maybe it can also be TV shows for all you know. So, guide to happiness and books that you've been reading, recommendations.
Yeah, guide to happiness. I guess, like you said, there's just so many highs and lows in this industry, right? So just don't take both to your heart. Like that's sort of what I've been trying to do for the last 6 years, 7 years. So just
Does
don't.
it help? Does it help? I mean,
Yeah,
you have to say you have to sleep well at the end of the day.
yeah, sleep well. Just don't let it get to you, whether it's the highs or the lows, right? Like as long as you're slightly detached, it works. It works brilliantly well.
Okay. Okay, that's a brilliant answer. That's a very nice, short, sweet answer. Detach yourself and try to sleep well. Books or recommendations or any inspirations?
So I'm right now reading this book called Creative Inc. Creativity Inc. by It's the Story of Pixar. That's it. That's very nice. But I think another sort of gem I came across very recently is a podcast. I actually don't listen to a lot of podcasts, but because I'm traveling a lot more now, I started listening to them more. And there's a podcast called Invest Like the Best. So there's a guy who's trying to speak to other sort of funds, and they're not trying to talk about the successes, but just figuring out the process of investing as to what goes on behind the curtains. How do they come to a decision? How do they sort of fight differences, etc. So that's been very interesting. It's a new find for me.
Okay, so who's the author? Creative Inc. is about Pixar, right?
Yes. Ed Catmull is
And
the author of that.
okay, anything else that you want to recommend? What I mean, do you get inspired more by startups as much as you get to hate them because you're spending so much time with them?
No, I think the journeys of these larger companies are very interesting. Like Nike, amazing book, right? Like that, and now Pixar also is a company that I admire because they've got things right again and again and again over multiple decades, and that's extremely hard to do, especially in a creative industry. So that's sort of what prompted me to read that. Apart from that, I'm reading this book called Noise, again by Daniel Kahneman, the author of Thinking Fast and Thinking Slow, that talks about problems in our decision making in any industry as to how often we get things wrong, and we don't even know that we've got things wrong, right? So that's sort of what the
Okay. Okay, Rohit, you've been fantastic. Thank you for your time and knowledge. By the way, ladies and gentlemen, he suggests that you read Creativity Inc. It's Overcoming the Unseen Forces That Stand in the Way of True Inspiration. It's by Ed Catmull. By the way, you'll like this book because it's all about staying strong and building a company that matters over the long run. And also, you said Philip Knight's Shoe Dog, did you? That's a good book you'd recommend?
Yes, of course. To anyone,
So
that's a must-read book for sure.
So Rohit, thank you so much. And ladies and gentlemen, follow him on LinkedIn. LinkedIn, of course, leave him questions and he'll answer them for you. Or you can write to me at vishal@theupstreamlife.com. I'll get them answered on your behalf. Please like, share, subscribe. And again, once again, Rohit, thank you so much for being on theupstreamlife.com. Thank you.
Thank you, Vishal.